The market regulator Securities and Exchange Board of India has sent a show cause notice to Hindenburg and to Kingdon Capital or Mark Kingdon and his entities, which is a foreign investor based out of Mauritius, for alleged violations in the securities laws with respect to shorts created in Adani Enterprises. The regulator in his investigation found that short selling began much before the Hindenburg report was made public by the US-based short seller. It also said that as part of the entire setup, there was an Indian entity, Kotak Mahindra Bank, whose arm created and structured the entire fund so that money can be channelized from Mauritius to India and into the Indian markets so that it can be short. Adani stocks can be short in the Indian market there. Adani Enterprise was the only stock in the derivatives market, and so the shorts were done in Adani Enterprises, which began in almost at the beginning of January of 2023. The account was set up by Kotak in between Jan 5th to Jan 10th, and on Jan 10th the first shorts came in from Kingdon Capital or the K Fund as it's called, which is the vehicle through which Mark Kingdon's entire entities invested into the Indian markets. As per the agreements which have been found by Sebi between Kingdon and the Hindenburg, the entire thing began as November of 2022, when the draft report of Adani was shared with Kingdon, and based on that there was an agreement which was agreed that there will be a profit sharing of nearly 30% based on the shorts gains from the shorts that will be shared between Hindenburg to Hindenburg by Kingdon. What followed was that the entire setting up of the account or the fund by Kotak was delayed. There was a cost involved to it, as a result of which this profit share from 30% reduced to 25%. But it did continue, the profit share did continue after that. Hindenburg came out with a report on Jan 24th. As per the investigation undertaken by Securities and Exchange Board of India or Sebi market regulator, the short began on Jan 10th. Kingdon entities began shorting on Adani Enterprises. They took a position of nearly 8.5 lakh shares. These shares continued for the month of January till Jan 28th, and thereafter it was rolled over to the next contract, which was a February contract. Kingdon knew about the fact that there could be a report coming out soon, and so that's the reason why the entire shorts were rolled over to the next month. And on Jan 24th, when the entire public report was made public, there was a decline in Adani Enterprise shares, which fell as much as 59% from Jan 24th to February. And that's when the profits were taken by Kingdon. Kingdon started squaring off the shares in early February onwards, between February 1st and February 22nd, in thereby getting a return of or profit of nearly 183 crores from the short sales which they gained, and of that 25% was shared with Hindenburg. Further, what has happened is that the entire entity or the vehicle through which it was done, it was undertaken by Kotak Mahindra Investment Limited, which is KMIL. Hindenburg has gone on record to say that the SEBI investigation report does not take any action or mention of Kotak vehicle, which was used to structure the entire investment, but it has been Hindenburg and Kingdon has been targeted as part of this show cause notice there. So if you look at the modus operandi of how it has gone through, the draft report was shared by Hindenburg with Mark Kingdon in as early as November of 2022. Hindenburg waited for Kingdon to set up an account with the help of Kotak. This trading account came up on between Jan 5th and Jan 10th of 2023. Hindenburg and Kingdon then agreed to share profits in the ratio of 25%. It was earlier 30%, then got reduced to 25% due to cost and time overruns. And then the report was pre-planned to coincide with the follow-on public offer of Adani Enterprises, which was underway at the time of the report release. Adani Enterprises completed the FPO, but then had to withdraw the FPO and give the money back to the investor because to safeguard the investors there. And The best part is that Hindenburg claimed that it had no association with any Indian securities market, but the investigation by Sebi revealed very clearly that, despite this disclaimer, there was a profit share agreement between Kingdon and Hindenburg for the profit that it would earn from the Indian market after shorting Adani enterprises there. So, India Fund was created especially for trading in Adani enterprise script by Kingdon. That fund did not have any other investment except for Adani futures shorts which were created through that. Also, the fact is that if you look at the kind of profits which have been garnered by these entities, Hindenburg traded in the bonds of Adani in the overseas market, which is outside India. They got a net loss of that, and this trading which happened was between November 22nd, 2022 and March of 2023. Bonds traded were in Adani Electricity Mumbai, Adani Green Energy, Adani Ports and SEZ. These three bonds, but for trading in bonds, they had a loss of nearly $5,000, which is there. But where it gained was trading, taking positions in the ETF, which is exchange traded funds, and the MSCI India Index, where it went short from January 24th onwards till the end of February, and in the process Hindenburg got a profit of nearly $9.2 million. So if you look at the total positions which were created, it was more than $43 million of positions which were created. And the gains were roughly around $22 million, which was there, of which 25% was shared with Hindenburg. So Hindenburg got a profit of nearly $14.5–15 million from this entire transaction, and Kingdon Capital, which is a foreign Mauritius-based FPI, got the remaining profits.